We're going to go around the world in 3 minutes, and here's what you need to know before the bell. So let's start with domestic markets this morning, which yesterday did a solid retest of support, both that downtrend line that goes all the way back to the beginning of last year. We've broken above that. We're also now above the 200-day moving average, and right now the 50-day is very close to crossing above the 200-day. Now that's that traditional golden cross suggesting higher asset prices. Again, as we continue to look at the markets, we have formed this inverse head and shoulders right now. We're now breaking that neckline of that head and shoulders pattern. Again, very bullish. Markets on a buy signal, but not exceedingly overbought yet. So again, markets on the domestic side certainly have some more room to go. Let's talk about international and emerging markets. Since the beginning of the year, international markets have been actually performing very well, and this has been on the back of a decline in the dollar, which we discussed in yesterday's Before the Bell, is that the dollar has now gotten very oversold. So one of the risks to the international markets trade is both weaker economics domestically, because if we get a cold, international markets get the flu because of the demand pull that comes from international markets into the U.S., but also a stronger dollar will also impact this because it makes goods more expensive internationally. Right now, though, the market has been international markets have been performing very well since the beginning of the year. Really, since those October lows, international has been performing well. The 50-day moving average is above the 200-day moving average. Again, we have that golden cross now in international markets, but they are very, very overbought. And so again, what I would wait for here to add international exposure is to get some sort of correction temporarily in the international markets. Again, that would be a bounce in the dollar would help pull some of these international stocks back, but they are very overbought short term. So again, some profit taking in international markets, maybe shift some of that exposure towards domestic markets, may actually pay off here in the short term. The same look goes for emerging markets as well. Emerging markets have also been performing well since the beginning of the year, just like international markets. Again, they've really been kind of tied in the hip. And again, the 50-day moving average is about to cross above the 200-day moving average, again, pulling that golden cross situation in, bullish for the sector. But this index is extremely overbought relative to where it is previously. So again, emerging markets even more impacted than international markets by weaker U.S. economics and a stronger dollar because they are export-based commodity countries in particular. So when the U.S. really slows down, they get hurt the most. One thing about this is that, yes, while international stocks and emerging markets have been outperforming the U.S. recently, they have been very long-term underperformers. So from a diversification standpoint in portfolios, they have really drugged down the performance of your assets over time by having an overweight exposure in international emerging markets. Because commodities are cyclical in nature and are subject to the ebbs and flows of recessions and economic growth, be careful here. If the U.S. economy is going into a recession later this year, we will begin to see most likely international emerging markets, commodities, etc., all begin to underperform domestic stocks. Again, also importantly, watch the direction of the dollar. That will tell you much about where to be allocating assets longer term. Again, if we come back and look at longer term performance, U.S. stocks, bonds in the U.S. have been outperforming typically now for the last several years. And again, in terms of weighting and percentages in portfolios, look to overweight there and continue to overweight there as we move further into this year. I'm Lance Roberts, and that's what you need to know before the bell.